Happy Thursday, Mavericks. This is Rob Reinhold. I'm jumping in for Ankit Sharma, who's on vacation. Here we are, the 1st of May. Let's jump into it. In this session, we're going to be talking about the news of the day. We're going to look at some of the news that moved the markets, and we're going to look at the technicals, and I've got some more trades for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's take a look at the returns first. We had the Dow up 0.2%, NASDAQ up 1.5%, S&P up a little bit. Now look, these numbers were much better, and we got a sell-off right before the close. And you know what? This is just the opposite of what happened yesterday before the close. We got a big shoot-up about 5 minutes into the close, a huge shoot-up. And then, can you believe it? We got good earnings from both Meta and Microsoft right after the bell. It almost seems like insider trading is actually happening. Surprise. And then today, we got a big sell-off right before the close, like literally a couple minutes. And then what happens after the bell? Well, Amazon has a terrible earnings report and guides down, and the futures are down. Look, this is the market that we live in. It's just how it is. You can fight against it. You can throw your hands up in the air and say, why, and scream to the sky. Guess what? None of that's going to help you as a trader. We have to trade the market in front of us. And that's just what we have to do. So again, unpredictability is what we always have to worry about in the world of trading. And we have to control our risk. We always control our risk because we have no idea what's going to happen. So we talked about the big tech earnings. Microsoft and Meta both beat. Let's talk about some of the economic numbers. This morning we got a jobless claims number for the first time. And I've been talking about this for like 2 months, saying I've been very surprised that jobless claims haven't risen. They've been at 220 for months. Well, today we got up to 245. It's not a huge jump, but it is a jump. So we're definitely maybe seeing this. I think there was 1 week back in March where we saw a little jump and then they went back to normal. But this is showing me, okay, maybe employment that I've been surprised about how well it's been holding up, maybe it's not all that great. But we also got ISM manufacturing, and it was above expectations. And the expectations are that that is pull forward for some goods in front of the tariffs. Overall, it was a neutral day, a little bit more gainers, decliners. And this above or below the 50 MA number is getting much, much better. Remember, at the low, it was like 85% below, 15% above. We're now back to a more neutral stance, and we're seeing that in the charts. Here we are in the charts. I've been talking about this 5,500 area right below the 50-day moving average as resistance. And look at today's candle. Boy, that does not inspire a lot of confidence. This is a beautiful little high base here. Running off the bottom here. And then we get this really nice high base. And then this is the breakout candle. And in fact, that's the breakout candle at the market close. If we were to take the candle, and this is the US 500, this is basically the futures or the CFDs on the S&P 500, you can see that this is even a more disappointing candle to have right at a major resistance point. We've got this gravestone doji here. Not a great candle. We'll have to look and see what happens tomorrow. We do have the employment report. Red candle, and I'm telling you, it's telling me that this level has held. It has absolutely held. I'm not saying it's time to get really, really aggressive short, but it's definitely telling you, hey, this market isn't as strong as it looked this past week. We'll have to wait and see. I said at the end of last week, I will have a much better idea of where this market is going Friday at the close, because we're going to have all this news, which we got a bunch of news this week with earnings, and we also are going to get the employment report. Tomorrow's candle will basically tell me, hey, this market has truly turned from a downtrend to an uptrend, or we still need to stay slightly bearish. And that's just where we are here. I will be updating everything tomorrow in my trading room video. Here's the heat map. As you can see, the big tech stocks got all the buying and everything else really lagged behind. This moves us to a zero. We are at a zero here on our market score. We were all the way down at a -3, and then we've worked our way up to a zero, and that's where we are at the moment. Now remember, zeros can either be on the way from -3 to +3, or it can be a bear rally, or it can be -3 to 0, and then it falls back down. We don't know which one. We just have to treat it as when it goes. We have no idea. Tomorrow's candle will be very critical for my analysis. All right, let's get into some trades. I'm still finding more bullish trades than bearish trades, which tells me that we're probably looking at more strength and weakness. I need tomorrow's candle, but that's what it's been telling me. Here is Howmet Aerospace. This is a stock that has been basing for a long time. If you take a look at a long-term chart on this stock, this thing has been an uptrend for a long time. This is the new kind of darling in the defense contractors. And you can see a clear breakout. And we've had a base all the way since February. We just broke out of that on some really nice volume. Now look, as a young trader, there's no way I would have been able to take this position because I would have told myself, oh, I already missed it, or it's already too high, or look how extended it is. I would give me all the reasons why to avoid this one, and then I'd go find something that hadn't done anything, it was in a downtrend, and I'd go buy it because it was quote unquote cheap. Well, I learned my lesson, and these are the ones you want to buy. This is where the action is. It's very possible that we get a pullback. I would not be surprised if we get a pullback all the way to 140. And if you say I want to wait for that pullback, then I'm going to wait for it. That's great. I find that waiting for good trades, the best trades will never pull back. The best trades will never pull back to 140. They'll just keep going. And I've done that as a spectator. I've watched as a spectator saying, oh, I love this trade. Everything looks great. I'm just needed to pull back. And guess what? The really good ones never pull back. And they just run away from me. And the ones that do pull back, guess what? It means they weren't all that strong in the first place. And I'm down here buying them at 140 on a pullback. Now, I actually want to get in this one here. But understand, I need to give this time. I need to give this a lot of time because it would not surprise me at all if we did have a pullback. I need enough time for this thing to be able to work up higher. That means you're going out to probably the June timeframe in options. If you don't like that, then this is not the trade for you. Would I do a trade in the May timeframe? Probably. We're still about, I guess we have 2 weeks out. I would do something at the money here, meaning do like a 146, 148 bull call spread where it just has to hold this level. That all it has to do is just hold this. But I wouldn't want to be much more aggressive than that in the May timeframe. But this one looks really nice. These are the stocks you actually want to buy, not the ones that aren't going anywhere. Next up, here we have Philip Morris. Now, Philip Morris is basing. A lot of people say, I want to buy this when it breaks out of the base. And I've found that same thing here. When I wait to buy this when it breaks out of the base, a lot of times I'm chasing them in the end. I like the trade. Here's a great thing about options. I don't have to be super bullish. I don't. I can do something like a 58.60. A 58.60 bull call spread. I'm going to pay about $1.20 probably and have 80 cents of upside. So not above a 1-to-1 risk-reward ratio, but a high percentage trade. I just needed to hang out here. I mean, heck, I could do a 59.57 bull call spread, and it just has to stay above 59 here. And I would go out either next week or the monthlies, May 16th. Let's see, sorry, May 16th is going to be the one. You don't have to play it that aggressively. That's a great thing about trading is you get to decide, first of all, how volatile your underlying stocking is. This is Philip Morris, not volatile at all. And then you get to decide in an options trade how aggressive you're going to be. You can be in really boring stocks with really boring strategies while the craziness goes on around you. It's totally up to you to pick that. And then in neutral here, I've got SMCI. Now look, this is not a low volatility stock. This is big volatility. This is big volatility, 28 to 38. That's a huge range. They just had a reduction in their earnings. That's what the big drop was that they warned on earnings. But you can see it found a low here. I think it's going to stay in this area. There's a ton of premium to be had. I'm looking to sell the 33s right in the middle and probably buy like the 28s and the 38s. So right here, that's going to give you a profit window right about in here. This thing moves a lot. As you can see, one of these candles could easily be bigger than the entire profit window, but I'm going to write these out to next Friday. I think we've got that big news was out. There's kind of a sigh. People are over it here. Lots of volatility, but not really going anywhere. So I do like this one on the sideways. Let's talk about tomorrow. I've had this for the last week or two, the top range of 5,500 being pushed. It has been pierced. It is right there. But again, after hours, we've got Amazon earnings. And I think Apple earnings might be out as well. Let me go check on Apple real quick. As you can see, Apple's earnings are out as well, and it's down 3%. So it looks like we're going to have a down day tomorrow unless the employment report saves us and pushes us up. What that means is that I'm not ready yet to give the bullish sign. We have to break out of that 5,500. We've got to hold the breakout. We're not holding it here. We're probably going to be down 1%, at least on the NASDAQ tomorrow at the open, maybe down 2%. That's going to push us right back into the range right at the top, and we're going to close maybe close to 5,500. Definitely not ready to give the green light here. Economic reports, we got the payrolls report, 138,000 jobs, 4.2% unemployment rate, and plus 3.3% wages. That's what we're looking for. That comes at 8:30 a.m. There's going to be some fireworks around that one. We're going to get a good idea of where Friday's candle is going to be after that report. All right, thanks for joining me. I will update everything on the trading room tomorrow. Take care. Goodbye.